Let's set the record straight about this federal rate cut. There's been a ton of information about, oh, the interest rates just dropped by 0.5% or 50 pips or all these industry slangs. So we're here to kind of break it down, give you the actual what's happening in real estate because of it and what's going to happen in the outer world a little bit. So the federal government just dropped their federal funding rate by 50 basis points, or 0.5%, or there's a bunch of different terms. Talk to your lender, your financial advisor to understand those a little bit more in detail. But essentially, it's how much money, or how much they're charging banks to borrow money for them to lend it to us to make their money. And when it goes down, so that's more directly affecting your, getting a loan from the bank, second lines of credit, interest rates on your credit card. Those are being directly affected by the federal fund rate. The real estate market, the mortgages kind of parallel the 10-year treasury bond. The mortgage rate actually has been pricing in the future, knowing that this federal rate cut was happening. They initially guessed it was going to be about 1/4 point, but it ended up being 50 points. They were lowering interest rate over the last month and a half, and we actually saw interest rates go down by about 0.5%. If you're looking at the government-backed loans, FHA and VA, we're in the mid to high 5s, 5.75. If you're looking at more conventional, you're just over 6. And if you're in the jumbo range, you're maybe at 6.25. Historically, we're at really good interest rates, but what we're seeing in all practicality is that the news are coming out that the rates dropped, and so buyers are getting excited and they're jumping in the market. So if you're a seller, that means more interest on your home. If you're a buyer, that means probably a little bit more activity and a little bit more competition for the homes that you're looking at. So making sure that you're pricing and you're strategizing with your real estate agent to make sure you're successful in the market is really important, and weeding through all of this nonsense and extra information to make sure that you get good, clear, concise information for what you need to do right now. Looking forward in the future, supposedly the Fed is optimistically going to be cutting the rates 4 to 5 more times between the end of this year and into next year. And you have a lot of mortgage brokers and other real estate agents, proclaiming that interest rates are going to be in the 5.5% range. It's a very optimistic outlook on it. Hey, I don't have a crystal ball. If I did, probably a lot more rich. You really got to make sure that you're looking at the holistic picture of, is it right time for you to buy? What are the interest rates doing right now? What are they projected to do in the future? And making sure that we're not sitting on the sidelines, passing by really good opportunities because you might think that the interest rate is a little bit lower. Or I could, don't buy now because I'll just have to refinance later. There's a lot of different programs out there that, give you either free or low cost refinances. Talk to your mortgage brokers about that. With all these optimistic projections in the market, we are seeing a lot of noise and a lot of movement. Even in my own business, I'm seeing more buyers come off the fence and get into the market. So overall, that is a good thing for the real estate market to get more activity going. So we finally hit just over 5,000 homes on the market here in San Diego. A little bit of history, pre-COVID, we were sitting around 14,000 homes on the market at any given time pre-COVID, and we were complaining how low inventory was then. So we just have over 5,000. We're still a third under the normal low inventory pre-COVID. Seller demand is still pretty high for buyer activity, getting good offers. But buyers are getting really picky and they really want that turnkey property on the way down. They're leveling off after this Fed announcement. Buyers are coming in the market. How's this going to affect you? Well, let's sit down, create a custom plan for your success here in the end of 2024, looking into 2025.